Ladies and gentlemen, if it does not say live in the bottom of your screen, unfortunately, you are watching the recap. Refresh your page, check back on the channel, and try to find the live stream that is actually live. But, woo! Oh, baby, did we enjoy our weekends? Huh? We enjoy these weekends, huh? I know after the stock market falls 30% on the NASDAQ in 5 months, you better freaking enjoy your damn weekend, okay? Is that too much to ask? Are we all crack babies? We're just 24/7 stock market. Live. Yup. What is up, baby? Cheese Chaser in the building. Chris Win Lambo, man, I feel you. Your comment gets more to the soul every single day. Liz Clamens Whistle back in the building, holder of the shares. Thank you for being a member. There's only a couple of you guys, and you guys really do stick out in here, so I do appreciate it. Win Hyundai. I don't know if we can afford it, man. Man, Hyundai is looking a little too pricey the way the portfolios are looking these days, but it's all right. It's all right. In due time, we shall prevail. Yeah, some Hyundais are like 70K. Yeah, our portfolios, man, they might have been 70K. And them fuckers are like 35 now. What can we afford? I could get you a sick minivan. I could get you a dad van or soccer mom van for 30. You could actually get like a Equinox. You could get like a used Tesla. But yeah, all jokes aside, you know, I'm actually pretty excited for this lack of a V-shaped recovery that we are going to see. And hear me out here. Instead of like COVID having to throw everything in at once and catch the bottom, which some people did, some people did not, you're gonna have a lot of time to acquire. This should really be your acquiring stage in a lot of companies that you believe in. Mine personally being a little bit of Polestar, a little bit of Lucid, a little bit of Tesla, getting a lot of Fubo, a lot of Square, a lot of PayPal. I'm buying some AMC, I'm buying some more DraftKings, you know, because people say inflation, you lose your money to inflation. You ain't losing any money to inflation in the stock market. You're actually making money due to deflation in the stock market. Now, my average cost on DraftKings is stupid. It's like $30 per share. Now it's trading at 11. My money goes 3 times as far now. So, you know, could be a year. Yeah, could be a year, could be 6 months, could be 3 months, but this should be your acquiring stage. Now, we do have some bad Chinese data to talk about here, which turn the futures quite dramatically. We'll see how things hash out, but some bad Chinese economic data that is now pulling everything down. The NASDAQ futures were up like 0.70% at the peak here since this, Chinese shit show of data that just came out. The futures have changed quite dramatically, but 2020 at 3,500. I feel you, bro. I got a Chevy Silverado 1500 4x4. Man, I'm so cheap. I don't like spending money on really anything, but especially not vehicles. Them things are, man, I'm too cheap. I for real want a Lambo. I'll sacrifice until then. But I got a 2008 Grand Prix. That thing is fast. And it's nice. I don't mind it. And then I do have the minivan. So I was just telling you, man, you can get a minivan for about $30,000 and knock your socks off. You know what I'm saying? They're real nice. They got the TVs in them. Road trips for days. I'm real humble in the way that I live. A lot of people try to impress. Not about it. But those Silverados, I could go for a truck. I would spend money on a truck. So I feel you guys in that one. Either a Ram 1500 or a Silverado, just big body. Um, Truck. I'm not even too picky on them. I like the big bodies. Uh, Shoot, give me black with black rims, black tinted out headlights. Oh man, them things are sexy. Can I say a vehicle's sexy? Is that like frowned upon? I feel like everything is like frowned upon these days. Like I used to get made fun of by my ex for calling objects sexy, like a car. Be like, damn, that's a sexy car. She'd be like, it's not sexy. Stop calling it that. I'm like, man, I'm gonna call it whatever the fuck I want to call it. GT. GTP. I think it's a GTP. Might just be a GT. I don't know. It's definitely got that takeoff to it. But I like to drive both, honestly. Futures were green earlier, now red. Yeah, Chinese economic data. Let's talk about it, baby. China's economic data disappointed. I should say disappointed. Or maybe I'm tripping. In April, as COVID controls weigh. Key points: retail sales fell by 11.1% in April from a year ago, more than the 6.1% decline predicted in a Reuters poll. Industrial production dropped by 2.9% in April from a year ago, in contrast with expectations for a slight increase of 0.4%. The unemployment rate in China's 31 largest cities climbed to a new high of 6.7% in April, according to data going back at least to 2018. So that top line figure, woo, a little bit scary. Retail sales fell by 11.1% year over year. Man, that's terrible. We have our own retail sales data that does come out Tuesday, and given what you're seeing with the futures, I think it could be very important. I mean, just look at it. Just fucking look at it, man. Down, we flipped like 1% in the Nasdaq in the last like hour, give or take. I'm buying a tractor, man. At this point, we should just buy horses. I think a horse is more economical, you know. Seriously, or buy a moped. Where I live, there's so many deer, and I'd go way too fast on like a crotch rocket, like a motorcycle, and yeah, that wouldn't be pleasant. But I feel you on the tractor. I do. They're kind of cool, honestly. I see them all the time. They're just chilling up there, just bouncing up and down. If you ask me, Mullen does have a really sexy car. That's no lie. Really, really good. That's one of the things that kind of made me like, you know, I'll put some money in it, right? If it goes to zero, fine. If it does very well, fine. It's because I could see the product actually gaining traction. Like when you see that vehicle, if it's to like the same standards as a typical vehicle, then I could definitely see it doing well. Hey, Super Show 31, tell him to look something up for us. Oh, we can look up whatever you want, baby. We are in there. LO wrapped Luna only if you can swing trade. Oh, yeah. Luna. Man, Luna got rug pulled. I don't care what anyone says, but Luna got rug pulled. Somebody made a lot of money from that. Ethos 7. What is going on in some of these off-brand coins? Jeez. Holy. I didn't know the crypto market did this anymore. I thought that was a 2021 thing. It says up 727.73% in the last, 24 hours here? That's crazy. Okay, buddy. Yeah, I didn't know crypto did that anymore. Interesting. I'm still holding on to my Mullen stock. Yeah, this is the time to be a buyer in my personal opinion. Just and that's the cool thing. You don't really have, like, I don't want to call it anxiety about like buying the dip, but you know, if you get paid like once a week, you know, once every 2 weeks, like there is no rush. Like I would stick to the same plan. If anything, if you put, you know, 500, 1,000, 200, whatever the number is per month or per paycheck, however you guys have it going, hopefully you do deposit at least a set amount per month into the long term, just buying anything really. I mean, be smart about it, but you know, divvying some stuff up is pretty good. But I would even think about upping the amount that you're investing. Obviously not financial advice. The stock market could do what Japan's stock market did and never hit a new all-time high in the last like 30 years. That could always happen. But I heard something pretty interesting, and it actually made a lot of sense. It was on CNBC by an analyst. I think he was a money manager or something. Regardless of what his credentials are, he said if you don't think the stock market will continue to go higher and hit a new all-time high, you're basically betting that modern civilization does not advance, because like China can do what China wants to do, but at the bottom of at the end of the day, you know, America is at least gonna have the top spot for another 5-ish years. But either way it goes, you'd basically be betting that the world does not evolve from here. And he was saying he's basically not willing to make that bet, and that's very true. But certain sectors right now are so juicy, like SoFi, Square, PayPal, your fintechs. Oh man, I want to go shopping like hardcore. Ken Griffin, man, I see your comments, and man, can I be nice? Can we just be nice to each other? Okay? I don't want to get on here and be an asshole, but you really give me asshole comments that I don't appreciate. Because no matter who you are, no matter what you do, you should be able to find value out of the insight that is provided in videos. And I see the comments, man, calling me a clown every day, which is fine. We're all right and we're all wrong sometimes, but I mean, after all, it's been more right than wrong for quite a while now. Luna is beyond impossible to recover. You're naive and foolish to think otherwise. I've said I wouldn't put any money into Luna. But if you want a potential lottery ticket, I mean, there could be a good trade there. Like, it's fallen so much that like to see 100% day from here or something even bigger, well, it wouldn't surprise me. Now, you got to be fully prepared to lose everything you put into it, because it clearly got rug pulled. Like, somebody drained the pool of liquidity. There's no way around that. Like, that would be naive thinking like this happened naturally. This did not happen naturally. This was a rug pull. No matter which way you want to put it, it was some form of a rug pull. Now, who got paid? Leave it up to, you know, leave it up to Wall Street to figure that one out. San Diego in the house. Love your stream, bro. Let's fucking go this week, baby. We love you. We love San Diego. All our Cali people. We love everybody. We just want everybody to make some money. That's the main goal. That's the main goal. And if you don't vibe with the program, if you don't watch the videos and just want to be an a-hole, that's fine, man. That's fine. But I hope you find your value somewhere else. Watching a documentary on Wall Street. Bets in MSNBC? I'm confused on that. If there is one, I would love to. Executive Order 14032 could be a big deal for AMC. Oh, is that Citadel and BlackRock, man? That's what I heard. They definitely got like, if I were to put a name on who had something to do with it, oh my god, those futures are nasty, dude. Give me a break. Oh my gosh. Down 0.5% on the S&P. now indicating we will open under 400. Dude, these futures are nasty. Shout out to China. Communism is just wonderful for capitalism and advancing society. That's what China likes to say, that being communist is like better because you can advance faster, because you don't have to get unanimous agreement for things, or you don't have to have a majority, which makes sense. But man, look at what you're doing, man. This could mess China up for a long time. Why do you think if AMC buybacks its own stock with this low price to pay its debt in the future? I mean, I don't necessarily think that they would do that, because to get a return out of that, doing a buyback, you need to see the price going up due to like good fundamentals or something like that. And then inevitably you would have to issue more stock, which would just be counterintuitive in my opinion. Ooh, BBIG Super Show. Isn't tomorrow the last day, I believe, for what's it called? Like the recording of holders. Yeah, Sofi, man, Sofi is killer. Sofi is such a steal right now, in my personal opinion. Hear me out with Sofi for a second. Sofi is it's gonna be one of those that essentially it's had its largest segment of its business shut down. And as much as people want the government to get rid of student loan debt, they're not going to be able to. It's the government's largest asset. It's one of the only things you cannot declare bankruptcy on. Why do you think they do that? Because they cannot have you get rid of your student loans. That's how the government tends to operate. It's their largest asset. They can't get rid of it. So eventually, I don't know if it'll be the end of 2022, if it'll be 2023 or 2025, but eventually that will come back. And you know who's going to profit from that the most? You know who's going to be in the best situation to just see a massive influx of revenue and profits by that time? SoFi stock. Look up student loan refinance. And these do move around a lot. When I did this earlier, SoFi was number 1, but SoFi's right here, number 2. Look at that. You're going to click on SoFi because, look, you're going to hear, I forget what it's called. Maybe one of you guys in the comment section can bring me the actual terminology here. But there's, like, why do you think people advertise so much on TV? It's not because they expect you to pick up the phone and go buy the product. It's because you hear it even once or a couple times, and it sticks out in your mind. So then when you go to do a search like this, you see SoFi, and it's like, boom, I know that. I feel more comfortable going with that. And everybody basically, by and large, knows what SoFi is. Why? Because SoFi Stadium, and they hosted the Super Bowl. If you know anything with sports, and if you're just modern American in general, I'm sure you heard that the Super Bowl was done at SoFi Stadium. So pretty bullish thing right there, I think. SoFi January 24, $5 leaps. Oh, you're onto something there. I like that a lot. Watching it on MSNBC. Yeah, I need to look into that. I like those documentaries. Creative Investor, they have nailed it down, and they prove that Citadel and BlackRock are the responsible parties for the death spiral of Luna. Wouldn't surprise me. You guys see how nasty these algos are. I mean, people are not really actively people. Okay, if you're down this massively, this is the worst wealth destruction that you have ever seen in the history of the stock market. The dollar amount of wealth that has been lost now is worse than any other period. I believe it's sitting at $7.6 trillion of wealth that has been lost in the markets here in this downtrend. Even the 2008 financial crisis, whatever you want to call it, was about $4 trillion of total wealth that was destroyed. The COVID crash was about $5 trillion, $6 trillion. around there. That was obviously very fast, but overall, you've seen dramatic reduction of overall paper wealth across the board. So yeah, it's pretty crazy. Happy clown though. Man, call me a clown. They do. It's okay though. It's okay. At the end of the day, I just hope everybody makes a lot of money. I don't care what you do, what you say to me, how you do it, as long as you don't hurt anyone else and you're hopefully positive about it, then call me a clown all you want. If you get rich, that's fine. That's all that matters. Or at least do well for yourself. AMC predictions next week. Well, it's widely going to be based off of what the markets actually do. You were seeing a very strong sense of the rally continuing until this Chinese data just came out, and that was very bad. Like, this retail sales number might spook the markets until Tuesday, so it wouldn't surprise me Monday to, dude, oh my god, to even see like a 2% down day and then a reversal by the end of the day, not off the table here. But you know, the fact that retail sales in China fell by 11.1%, more than a 6.1% decline predicted by a Reuters poll, that's really, really bad. And you know, what's going on in China is different from here, but if their retail sales drop by 11.1%, people are going to say, hey, you know, we know COVID's going on over there, right? But how much of that is just organic retail sales slowing down, right? And that's what markets are kind of going to be fearful of. And I think this kind of goes to show what the markets might do if our retail sales are bad. Yeah, so it's going to be dictated by the overall markets, and that's the thing, you know. Retail sales could be good or bad. We also do have Fed Jerome Powell. I believe he speaks on Wednesday. It doesn't actually come up in the economic calendar, but I believe it's some kind of interview. I actually heard about it only a couple hours ago after the video was out earlier. It's not a scheduled, like, it's not in the trading economics or any other economic calendar, but he actually does speak this week, so we might get a little bit of bad news, potentially good news. But show me on the doll where Ken Griffin hurt you. Anyone remember that? Man, can I show you my portfolio? Is that appropriate as well? Because, man, it's terrible. It's terrible. Thank you, Citadel. We appreciate you and all of your scamming needs and fucking line your own pockets. Like, that's the craziest part. Like, my biggest beef in 2022 is definitely the trading algos. Like, nobody at this point, like I said earlier, is selling stocks unless they have a margin call. And that's the bottom line. If you're down 50, 60, 70%, like the average NASDAQ 100 stock is down over 50% from its highs, you're not selling those stocks, dude. Give me a break. You're not selling those stocks unless you're forced to sell those stocks via getting a margin call. Just period. Like, that's it. The algos provide liquidity. That's their job, to prevent big market swings, but I mean, they're just taking full advantage, just shorting into the ground. Are people buying Luna now or letting her die? Do you want to know something funny? Actually, quite ironic. I mean, oh my god, they're tanking. Dude, the futures are getting destroyed. That's nasty. NASDAQ down 0.65. S&P down 0.72. That is horrendous. Jeez. But my ex wanted to name our daughter Luna. True story. True story. Not even lying on that. But I fought and I won. And it's Khaleesi, like Game of Thrones. But I call her Ling Ling. Ling Ling, and then I call her Wee Wee. She acts like a little Wee Wee. What are you doing, Wee Wee? Man, it just flows. It just feels right. Feuds are ripping. Yeah. Yes. They're just ripping. Ripping our portfolios in half. It's good though. Like this is where the money is actually made. Like, believe it or not, obviously I think this goes without saying, but the money is not made when the markets are hitting all-time highs. The money is made when you step in and take that quote unquote risk. Because people think it's like riskier to buy stocks when the markets are down. What's the Nasdaq still down? Like 20 something percent? It did touch 30% at one point, but it's still down about 25%. You know, the overall mentality of running away when things get bad, it is so counterintuitive to what you should actually be doing. Like a lot of people, even on CNBC or other business, networks, or even YouTube, will come out and say, don't buy stocks right now. The bottom's not in. It's like, fine, but if you're buying a stock based off conviction, fundamentals, whether they're current fundamentals or future fundamentals, that's where the money is made. Sure, you shouldn't put everything in one day, but to tell people to not buy right now, it is not doing them any help. Like the day Powell pivots, mark my words, the day Powell pivots, the day he says, yeah, we're on the right course, we're gonna wait and see how the data looks, or fully pivots, or he just says, yeah, we've tightened enough, we're done, the markets are going to rally probably 5 to 8% depending on how low we go until that happens. So you don't want to miss that day, and you don't want to be buying on that day. You want to have your ducks in a row, but you're going to have a long time to buy. Potentially, this 2022 is going to be real interesting. I don't really expect anything too crazy out of 2022. Sell, you lose. Buy, you win. Exactly. The biggest beef is that they're letting them get it. Yeah, that's my biggest beef too. Like 100%. Is like, dude. It's so ridiculous, but like even the last 10 minutes of trading, you could call it 10-minute rigged. That's what I like to call it, because it's fucking rigged. There's no other. It's rigged. 100% rigged. This is a phenomenon since 2020 that is essentially been happening, and it's just flat out rigged. The last 10 minutes before trading, or right on that 10-minute mark, you see a big green or red candle, and you start to see wild moves. Sometimes it's more obvious than others. Like some of the 10-minute rigs at the last 10 minutes, literally 3:50 p.m. if you're Eastern time, or what would it be, 1:50, 12:50, 1:50 if you're Pacific time. Some of these last 10-minute moves, just one candle will be like 1%. That happened not too long ago, and it's like, what the hell? Like, people are not going out and actually buying that many shares in that short amount of time. Like, it's blatant price manipulation. I think it's very clear to call it that. It's just blatant, just absolutely terrible. Futures were so green a few hours ago. Yeah, it was terrible. Freaking. Just China, man. I voted no on all my AMC shares. To all proposals, shareholders need to send message to Adam Aaron and board. There we go. There we go. We know and love all of this about you and Ling Ling. Well, we love you. And we love all of you guys. And I'm telling you, just give it some time. Good way to look at it is probably one of the most famous quotes you've probably heard before in your lifetime. And it's a simple one. Like, it doesn't take, too many brain cells to relate to this one. But the day you plant the seed is not the day you reap the harvest. You got to give it time. But in the case of a tree, you continue to water, and that's what you should do to your portfolios, especially when the markets go down. You should, in theory, be buying a lot more now than you have in the last year, which it's completely the opposite of market instincts, right? People just don't want to buy right now. And it's like, dude, the NASDAQ is down 25% right now. Half of the NASDAQ 100 stocks are down over 50% from their highs, or over half. I think it's like 60% of stocks now in the NASDAQ 100. Just absolutely terrible out there. And people tell you not to buy. Like, the odds of us dropping another 20% comparatively to making a new all-time high, believe it or not, is much lower. Like, the odds of the NASDAQ falling 45% from peak to trough is a lot smaller of a chance comparatively to the NASDAQ gaining 20%. It's just the law of what is it? Not compound interest, but fuck. I'm bad with the names on these terms, but yeah, it's good. But no panic to buy though. No panic to buy. And then Fed balance sheet reduction hasn't even started. Yeah. Amen. I mean, that's well, the markets are pricing it in. So it's like it hasn't started, but the markets already have discounted that, if that makes sense. Once you get further along in the balance sheet reduction, that's where you're going to see more pricing in and more pricing in and more pricing in. The question is, and this is the real gamble. This is modern monetary theory to a T. The thought process that you can just print your way out of any problem with modern monetary theory. And right now you're at a very important time in history. When you look back at it, 2022, you're going to have some obviously mixed feelings about it, but this is the real test, because what is happening in 2022 that has never happened before? What has never happened before that's happening in 2020? It's not that the Fed's reducing their balance sheet. That shit happened before the markets fell 35% in 2018. Fed stepped back in and said, okay, everything's fine. But they've raised rates before all that. But what has never happened before is the rate of the economy slowing down at the pace of the Fed raising rates. You've never had a disconnect there. Usually when the Fed is raising rates, the economy is actually getting stronger. The more in line theory of the Fed should raise rates when the economy is doing well. So when it is not doing as well, you can cut rates. But that's not how it is right now. The Fed's hand is forced to essentially raise rates even though the economy is slowing down. Like, we had like a 1.4% negative GDP print for Q1. If the next print is even marginally negative, you're in a technical paper recession. That's never happened before. These is not financial advice. I am not a financial planner. Is it the moon, baby? The only Simon in the house. The baby. Ooh, what's up, Tyler? Oh, yeah. Man, that guy is funny. But what is going on, Mr. Simon? Appreciate you. Another member of the channel. Appreciate you. Bullish week for AMC, you thinking? Oh, man. You should have asked me this like 2 hours ago, bro. Man, you should have asked me like 2 hours ago. I'm just playing. This is definitely going to weigh on the markets, I think, a little bit more than not, the economic data, and especially the retail sales, because we have our retail sales coming out on Tuesday. So I wouldn't make any conclusions off of what we see tomorrow. The biggest point of data is going to be retail sales, 7:30 in the morning on Tuesday. So by the time you wake up, you're probably going to see what in the hell is happening? You're probably you're probably going to see a decent move to the upside or to the downside. So if I were to imagine, considering how much the markets are already down, probably will get some level of bullish tone to this upcoming week. At the same time, the Fed speaks later throughout this week as well. So that's going to dictate a lot as well. But I mean, these stocks are down a lot. They're very attractive. Like, man, certain sectors are just trading way too cheap. Like, why the hell is a Fubo trading this cheap? This stock, dude. I've been buying so many shares of Fubo over the last month. It's incredibly cheap right now. Like, fundamentally incredibly cheap. Just wildly cheap. And they're growing revenue consistently, expecting $1 billion in total sales. Their whole company is, what's it worth? Like this is where you get the market disconnect, especially when there's been this much red in the markets, this much fear. You know, people throw fundamentals out. They just don't care. And then when people are like, oh, wow, you know, these companies are not so bad, right? Then you get a 13.23% rally in a day. A very respectable yearly return in one day, right? Another 1% in after hours. But look at Fubo. Its market cap of $649 million, and this company is projecting in between 1.012 and 1.015 billion in sales, and it's $649 million market cap. That's a half. That's 0.50 price to sales ratio. Like, that is value investor cheap. And something else bullish for this week that you're probably not going to hear too many people actually talk about is that 13F filings start to come out. So if you're seeing a lot of influential people with a lot of money, like we just seen with the Robinhood, what's his name? The FTX owner just bought 7% of Robinhood. That made the stock go up 20%. So in a day, what was it, like 25, 30%, something like that. So you're going to get those 13F filings, and I think that could definitely have a bullish effect on the markets, especially certain stocks and certain sectors. Like, look. These guys are so funny. Like, it doesn't make any sense, like, logically. Like, even look at the upgrades and downgrades on Fubo. Like, their last upgrade was January 28th, 2022. I get we're in this market environment, but since its latest downgrade, May 5th, I believe that was right before earnings, or maybe the day after, maybe the day of. Doesn't even matter. But the stock becomes less risky, and you get all these downgrades. They're not like, oh yeah, it's trading at stupid cheap valuations, like a half, a 0.50 price to sales ratio. You don't find that. That's very hard to find in. I wouldn't call Fubo an established company, but they're not like a brand new player. Member for 8 months. It's been 8 months with your beautiful face, Mr. Simon. Oh my gosh, I am honored. I am honored, baby. There we go. There we go. Ape Infantry. Coming up to general status. Then Commander. Futures tanked when Christmas Nap came out with bad economic numbers. Basically, yeah. Yeah, if I were to sum it up, that's basically, yeah, what I would sum it up as. Bullish for AMC week of the 23rd. Yeah, it's pretty hard to be like bearish on a lot of stocks at this point. Like the time to be bearish was like January, or like when the Fed first initially said that they're going to crack down on inflation. Like that was the time to sell everything if you wanted to. Like that, you know. I think right now should be the greedy time. The time to be a little bit greedy with your purchases. I mean, China came out with bad economic numbers. Thinking 14 tomorrow and 15 Tuesday AMC. I mean, if we get those weird rallies like we seen, it would not surprise me. Like, dude, GameStop got halted, what was it? I think 3 times to the upside on Thursday, and then once to the downside for no reason. Like, that's weird. That's sketchy, dude. But, yeah, AMC even hit an intraday high of like 1350, 1365 on Thursday, and then did come back down. But that was a big move. It wouldn't surprise me to see a lot more of those kind of big moves. Smash the like button. Yeah, I hope you guys are ready. Okay? Because, I mean, it was the weekend. I get it. You know, we all like weekends, especially when the market drops the most since 1939 in the fastest amount of time. Worst stock market in 100 years. The weekend feels, it just hits better. It's just better that way, okay? But it's time to go. It is game time. Time to get back in the game. There's going to be lots of opportunities, but we talked about it on the other live stream. You got to be a little bit careful. I've been trading a lot less as of recently because nothing is attractive especially with options on a risk to reward basis, unless you're watching 1 minute candles and scalping the S&P, which I do, but I don't like to trade like that. I like to have conviction swing trades, but in this market, you're not getting that, and the volatility is so high. You could be up 4% on the NASDAQ like we seen on Friday, down 4% tomorrow, very possible. And market makers, they scam you at that point. They set like super high premiums for everything because they don't know what'll happen. Implied IV, it came and it stayed. So like even if you do catch like a 4% down day on the NASDAQ with puts, you're not getting paid out the same way you would as if there was less volatility. Does that make sense? You might make 100% if the NASDAQ falls 4% and you had puts on the NASDAQ. But, during a less volatile market, if you were just playing, any random, Powell speech or whatever, you could make 1,000%. Like, it doesn't make as much sense on a risk to reward basis to be doing a lot of like swing trades here. But buying stock, that's the most attractive thing right now in my personal opinion. Affirm thoughts. Thank you for what you have done, my bro. Cheers. Thank you, Ali Paula. Affirm, man, I'm destroyed on Affirm. I'm down like 75% on Affirm. It's terrible. But I will say it's a lot less risky now. And I think the business will recover, but it depends on how hard demand slows down. If the Fed really has to raise rates to beyond neutral, which neutral people argue is like 2.5 to 3.5. Well, like 2.5% is where people think. Some people say it's like 3%. If they have to raise it, like they said, potentially much higher than neutral, say 5% for a federal funds rate, then you're going to see like 10% mortgage rates for low quality borrowers. You're going to see very high rates, and it's going to make virtually all lending just unappealing. We'll just call it that. I mean, I don't want to do too much lending when borrowing, I should say, when rates are that high. But yeah, they did have a really good earnings, and they are now pricing in profitability, I believe, by the end of this year, if not the beginning of 2023. So it's not a bad bet at these levels. It's really not. I would not be opposed to adding a little bit more here to get my average down, because yeah, I'm clapped super clapped on Affirm. I think that might be one of my largest losses. I think Sofi is Sofi, AMC, they're all big. Let's be real. Like, if you have bought and hold anything that is long duration growth, meaning it's not profitable now, but will be profitable and hopefully a much bigger company in the future, aka, buying Apple in the 2000s, right? Long duration growth, it's gotten absolutely destroyed, because people don't care what's going to happen in the next 5 years. Even if a company like Sofi could 10x from now, they don't care, because it's not going to do that in the next 6 months. So, yeah, it's definitely one of those high risk, high reward type of investments. I would really look at these stocks that you are buying. Not financial advice. Look at them however you want. As multi-year buy and holds. Even, or just be prepared for that if you have to. Maybe it doesn't turn into that, but be prepared for it to turn into that. This is not really like a huge swing trading kind of market. I think the real book value and the potential for these companies over the next couple of years is much better than what you could get on a 20% daily move on Sofi. I truly think that stock is a 10x in the next 5 to 10 years. But my opinion, could be wrong. Does Melvin Capital have to return their shares in June before they go out of business? Interesting. I'm not fully aware of that. You would think in theory they would have to. They probably could just transfer whatever they have to their new fund, because didn't they say that they're going to keep shorting or something? They had came out and said they were going to focus on longs, and then they're going to focus on shorts again, and it's been very back and forth when it comes to Melvin. At least, well, that's what I feel like. I'm at 36 average. Yeah, see, that's not terrible. I'm at like a 96. Which that trade just completely fell apart on me, and I definitely should have took a small loss on it, but that's fine. I'll just average down. Like, I think if I put like 30% of my initial dollar amount that I put in, which was like 5-ish thousand, then I should be able to average down to about 45-ish, and that's a lot more reasonable to get back to when the markets do bounce back. But Affirm has a lot going with the Amazon partnership, in my personal opinion. I don't know if they did they clarify on the earnings report or the earnings call when that is supposed to go into effect, or possibly is in effect. I haven't even looked, honestly. It's kind of one of those. I think it'll be around, and I think it will do well, but it's going to take some time in my view. But Amazon, that's as big as it gets. Puts on everything. Well, 24 the money. He had he just made a very interesting comment, which I've talked about it in videos. So if you truly watch the videos, then you already know this, and hopefully it provided you a bit of an eye-opener when I was talking about it in the video. But 24 the money says, don't be greedy with VIX so low. And that's exactly the case. I've pointed this out in where is it? The fear and greed index here, and it's got a bunch of different, you know, charts and gives you this number, right? Which we're extreme fear. Like, even with the bounce on Friday, it's still terrible. It's still more fear than we've seen over the past 10 days. So we're still very, very high even with that bounce. But, you know, stock price strength, extreme fear. Stock price breadth is extreme fear. Put call options, extreme fear. Market volatility, the VIX, is actually neutral right now. Safe haven demand, extreme fear. Junk bond demand, extreme fear. So the market the VIX is interesting right now, and let me ask you guys if this makes a little bit of sense. And if you watch any analyst, or, you know, just watch videos in general, people were screaming from the rooftops that we will not even see a tradable bounce or tradable bottom, which possibly not. We'll see how this week plays out, but people were saying that was pretty much impossible unless the VIX broke out to a new high. And the last high we seen was March 7th, 2022, and the VIX hit 36.45. We only ever hit 34.75 here, and that was May 9th. So we did not break out to a new high. People were saying at least you need to see the VIX at 40 to get a tradable bottom from here. But the VIX monitors puts and calls on the S&P 500. So what are options? Options are insurance. They're to protect downside. They're to, you know, potentially make a little bit of extra money selling calls, right? Betting, a little bit of the gambling side of that. But by and large, buying puts is seen as protection. So institutional investors that really move the VIX around, they like to buy puts to hedge out their equities. But in my personal opinion, from what I've heard and from what I've seen and what the FINRA data tells us, there's a lot of people right now that are holding a lot of cash. So if you are holding cash right now, when the markets are dropping, you're actually, in a weird way, making money off of that. Why? Because you're not losing money, but at the same time, everything becomes a lot cheaper. So if you have a lot of, say a hedge fund had 30% cash, 70% equities, sure, you might want to buy some protection, but if you had, let's say, a car sitting in the driveway that could not run right away, take this analogy and run with it with me, you wouldn't necessarily have insurance on it if you didn't expect to drive it for the next 6 months, right? Why would you have insurance, or a lot of insurance, I should say, on your portfolios, aka buying puts, if you have a lot of cash? At that point, you're just speculating. And hedge funds, they don't really like to, institutional investors, money managers, whatever term you want, they don't really like to take massive gambles, especially during this level of volatility. Like COVID crash, that was pretty easy to see coming. This, I mean, nobody knows anything. Like, we were just up 4%. We could be down 4%. We could be up 2, down 3, up 5. Yeah, there's no money to be made by trying to trade these options right now. By and large, there's a lot more risk than potential reward. So I think there's just a lot more people, a lot of big money that has a lot more cash now. So there's not a reason to go out and buy a lot of protection on their portfolios, because, like I said, you're not going to buy a lot of protection unless you need a lot of protection, and you don't need a lot of protection if you have a lot of cash. So that's kind of the whole philosophy with why I think the VIX did not hit a new all-time high. Simply put, there's a lot more cash on people's books or portfolios than a normal market downturn. And there's evidence of that. I'm in everything. Thanks for the advice. Well, it's not a bad idea, I think, to be in everything. Like, little bit of, like, dude, get some fucking dividends too. Get some dividends. Get your high conviction. Get a little bit of speculative. Not financial advice, but that's kind of, I personally think a good way to play this right now. Like, everything has been destroyed. A lot of more value defensive stocks are a lot more expensive now. So believe it or not, like, buying a Facebook is like 3 times cheaper than buying like a Clorox, and then they're an easy target. I like to pick on them all the time, because why the fuck are people jumping in to Target or other stocks that are seen as like recession-proof when they're valued 3 times higher than something like Facebook, 2.5 times higher than Netflix? The disconnect does not make sense. So if there's any ever, okay, that did not come out right. If there was ever any time to get a little bit more, throwing out small seeds here and there with different kind of high risk, high reward kind of strategies, it's probably now. But obviously, don't take my word for it. Like, when I say throwing out seeds, it's like less than 1% of my portfolio. If you put 1% of your portfolio into a speculative stock, call it a mullen or call it something else, right? If that stock goes up 10x, you just made 10% of your portfolio. Not bad. At the same time, you didn't risk to lose a lot. If it falls 50%, okay, you lost 0.5%. Big deal. It's not going to make or break you. That's the way that I like to look at it. But really, your conviction, your 5 to 10 year outlook kind of stocks, those are the ones that I have been buying a lot more. And I've really warmed up to Fubo a lot. And I really want to make more videos on it, because I think there's a massive opportunity there, but who knows? Yeah, what is crypto doing ever since that China stuff came out? Is it selling down? Or no, not really. I gotta go to Coinbase Pro and get all cracked out to see what's going on. Or actually, I forget, Webull actually has crypto. Like Spotify. This one's very interesting to me. Spotify's CEO just spent $50 million buying shares of Spotify. And let me tell you, there's hundreds of different reasons executives, CEOs, board members would sell stock. It could be a damn divorce. It could be paying for college for one of their kids. It could be buying a new house, buying a boat, going on vacation. It could be anything. There's only one reason why people buy stock. It's because they think it's going to go higher in the future. That's it. Only one reason. So you want to look at those insider buys. What was I looking up? Bitcoin. And that's a good thing to remember. There's only one reason why people why executives buy stock in their own companies, because they think it'll go higher. No other reason. Why is Bitcoin Cash come up? I don't want Bitcoin Cash, bro. Okay. Gotta get cracked out with all the shiny lights. Let's get it. Yeah, it looks like we've seen a little bit of a sell down on the China news for sure. You've dropped about $1,000 since the peak. What was this, like 2-3 hours ago? But really starting to see bigger candles now after the whole China situation. So what I'm asking is the VIX affected as much by volume as by sentiment? Yeah, no, it's solely based off of the puts and calls that go on the S&P 500 on a pretty much daily basis. It's calculated by a couple different things like the duration of options, the volume, things like that. But sentiment has nothing to do with the VIX. No, it's all based off of the calls and puts that are currently trading or being or held or trading on the S&P at any given moment. That's why you've seen the markets hitting new all-time lows and the VIX has not reacted. Like the sentiment, like go back to, what was it, Thursday? Like the sentiment was at definitely like multi-year lows right now, and you know the VIX is not going to react to that. It's only based off of the puts and calls on the S&P 500. But I think that's where a lot of people, like especially big money, like fail to realize that. It's like just it's kind of common sense. It's kind of something you have to dig into a little bit, like do some mental exercises. Like there's no logical reason to buy a lot of puts if you don't have a lot of stock to actually protect. I really think there's a lot of cash out there right now, and FINRA data does support, you know, that there's like 300 billion in cash increase in just the last couple of months. But yes, earnings for this week. Monday, you got pre-market nothing. MindMed. I do own a little bit of MindMed. That's one that I have as a small seed for a high risk, high reward kind of investment. I only spent like $100 on it. I think it's not like 50%. It's just one of those you just set it and forget it. But they report in pre-market on Monday. After hours on Monday, Sundial, Take-Two Interactive, shout out to GTA. That's basically it. There's a couple other ones. High Peak Energy, I believe that's called. That's what that is. But Sundial and Take-Two, those are going to be the more exciting ones. Tuesday pre-market, Walmart, the Home Depot, JD.com, Peloton. I thought that was Palantir for a second. I'm like, what? I thought they reported. So nothing too crazy. JD, Home Depot, and Walmart. Those will be important for, especially Home Depot and Walmart, for the consumer, for the overall markets. Really nothing interesting Tuesday and after hours. Like companies you probably never heard of. Wednesday pre-market, you have Zim. I believe that's the one with the dividend, right? Everybody loves Zim. What was it? The stock went parabolic. I don't even know the actual name, but people like the dividend with it. I believe that's in pre-market Wednesday. Target, Lowe's, TJX, Colgate, and that's pretty much it for Wednesday pre-market. After hours, Cisco, Synopsys, Bath and Body Works, Hawkins, and that's pretty much it. Thursday pre-market, you have Kohl's, Golden Ocean, Canada Goose, Eagle Materials, and that's pretty much it there. Palo Alto, that could be a good one Thursday after hours, as well as Applied Materials, Deckers, basically it there. Friday before open, you have John Deere, Foot Locker, Buckle, and that's pretty much it. So the key names, the notable ones that I want to look at and pay attention to: Sundial, because that thing could just rally big at any given time. Take-Two, that's going to be interesting with the new GTA 6 that we've thought was coming out for years now. Walmart, Home Depot, Target, Lowe's, TJX, Cisco, Applied Materials. That's one that I wanted to initiate a position in, but did not do it. Foot Locker, that one can move big. Buckle, John Deere, So really just the big consumer retailers: Target, Home Depot, Walmart, Lowe's, TJX. Those are going to be very important for the markets, for the overall consumer. Tyler, did you know that YouTube is blocking the word subscribe in the live chats when non-mods write it? That is actually very interesting because I have not heard anyone say subscribe to the channel in the chat in my whole life. We show the like button love, but the subscribe button gets no love in the chat. Semiconductors will triple this year? But we got you, bro. None of you snitches. Just remember, snitches get stitches. Okay? You better not snitch on Mr. Simon over here. Like an AMD or like a more kind of like appliance kind of semiconductor company. Or like a Qualcomm, like phones. But that would not be good for the overall markets. I feel like inflation would be wild if semis went up. Just crazy good. BBIG, when is the dividend? I believe it's late May. So I believe it's like the May 27th, I want to say. I'm not exactly sure on the date. I don't own any shares. I do own 450 options for 2023. And depending on what happens tomorrow, the record date, I'll probably sell out of that, and just, walk away with whatever is there. I might hold them. It's just one. I'm totally undecided on BBIG. Like I thought if you were going to see a rally, it would have happened now, but it wouldn't surprise me to see people come to reality tomorrow.
When I say hedge funds are digging their own graves, I'm sure all of you guys...
Oh my gosh. I'm spazzing out today on the damn fucking computer. But so type in BBIG, I start playing a video, I click on the live stream. What is happening? But yeah, they were up 2.31% in after hours. Volume has not been impressive at all, given this was the catalyst we were waiting for like a year now. So it's really hard to say. But I mean, with the dividend, I believe it's like a 20% dividend. So to see the stock not go up at least 20% would be very surprising. We're making stuff for AMAT and Lam Research, but AMD is another semiconductor. Opinionated asshole. If you just wrote simply subscribe, I have not seen one person their message come up as just subscribe. I do see your message now, but I have not seen any message saying chat saying subscribe actually come up. So, damn it, YouTube. Why are you doing that to me, man? Just promote the subscribe. Jeez. I did twice already. Oh, man. Why is that? I feel like that's counter what YouTube should do. Oh, man. You guys wrote it? Yeah, I can't see any of that. Can anyone see it? That's wild. Executive order. Here, look. I'm going to go ahead and take note of that executive order so I can go ahead and research it a little bit more and see if there's something there. Because I feel like there's been a lot of executive orders that have been talked about as of recently. It's hard to keep track of the government. They like flip-flop 1 second to the next. You know, like Biden says inflation is due to Russia, and then they say it's due to the Republicans, and then the Republicans say it's due to the Democrats, and then Powell's like, hey bro, we just got a problem over here, and then us stock traders are like, man, just figure it out, just give us something. That's what's currently going on. It's like they blame them, Powell just kind of side-eye blames everyone, and then just destroy your wealth. That's it. That's the mathematical equation here. Democrat plus Republican, Fed squared equals stock market down 50%. Basically. Research the squeeze times and times the order was signed. Oh, is that? Get out of here. That's not the oil thing, is it? Yeah, YouTube's crazy for that. But yes, thank you guys for tuning in. I had a blast today. You guys are incredible. And it's time. It's time to plant some seeds, make some shit happen. This is every day the markets drop, think to yourself, it's less risky. It's less risky to put money to work, and eventually you'll see the end of the light at the end of the tunnel. So that is going to be all. Thank you guys for tuning in. Hit the like button, subscribe to the channel. Even though you cannot write subscribe in the chat, hit the subscribe button because YouTube is out here playing the ape community. Nonetheless, get yourself free stock if you have not already. Weeble, Moo Moo, and Public down below in the description. It's free money. Never been a better time to get yourself some free money. If you guys want to come trade with us live in real time, link down below in the pinned comment as well. Shout out Mr. Simon. Shout out to all of you guys that actually have memberships to the channel, and your beautiful name stands out just perfectly. Like, you guys are looking good. You guys are looking so good right now. All the members, holder of the shares, Tim, appreciate all you guys. 24 the money, Jersey Recycler, Ali Balla, all of you guys, David Debs, Cheese Chaser, thank you guys, MC Prosperity, man, you guys are great. Creamy Goodness, can't leave you out, Mike Tyson, Spam on a Stick, all of you guys, appreciate you guys. Enjoy the rest of your night, and I'll see you tomorrow.